Hi, you're watching Investor Insights, and on the eve of the Australian elections, I'd like to talk about a couple of things that happened this week. First, it's been the release of the Chinese PMI data over the weekend, and Chinese data being as accurate and reliable as probably public transport, you wouldn't read too much into them or trust them. But they were positive nonetheless. A reading of 51 was the highest number in 16 months, I think it was. Keep in mind that 11 of those months sequentially they were negative. So the manufacturing sector was contracting for almost a year. But the number of 51 barely suggests a tiny little increase in manufacturing. So a little bit of expansion, I suppose, is better than contraction, but the problem I have with it is that it's still a tiny number that we're looking at, and that drove the Aussie dollar on Monday morning about 120 basis points, from 89 to about 90.2. Chinese numbers are very unreliable, and this could just be an outlier. So if I was gonna do anything on that, it certainly wouldn't be go so aggressively long the Aussie dollar as a lot of these traders have been doing. But enough of the China story. That's not so important to us, for our purpose anyway. The more important data that's closer at hand, or closer to home I should say, has been the GDP print released on Wednesday lunchtime Sydney time, and that read 0.6% for the quarter, or 2.6% annualized, and that number in itself is a very important number to traders like myself, or investors like myself, because it really shows that this country is not only not growing, but it's contracting at an alarming rate. Now, whenever we look at GDP data anywhere on the planet, these are just nominal figures. So an expansion of 0.6% doesn't take into account inflation. Now, I made a video on the CPI data that was released last month, and that number was an absolute joke, because it just so happened to have been 0.6% for the quarter. Now, if you were to trust government numbers on inflation, or GDP for that matter, then you will realize that real GDP is flatlining. I mean, 0.6% nominal growth with 0.6% inflation means your real growth is stagnant. It's just not moving. But here's where the government's lies and propaganda really hide the true extent of how bad the economy is that we all know that government inflate GDP numbers, and they underestimate the CPI. So technically the GDP is smaller than what they say it is, but at the same time inflation is bigger. Now, I can't comment on the size of the GDP increase because, quite frankly, I wouldn't care. My main concern is the CPI numbers, and we all know that the government's statistical officers have no idea what they're doing, because in the last CPI reading they stated that transport costs were actually down 1% for the quarter. And I still don't know how they got to that despite having a 15 to 20% rise in petrol prices alone for the quarter. So I'm always taking inflation to be running at between 5 to 8, maybe even 10%. And if that's the case, the real contraction is severe. Another telltale sign of this contraction in real GDP is the fact that the current government, probably be in government for another day or so, but they've been trying to get into a position of a budget surplus for the past 3-4 years, and they came to within $1 billion, and we were supposed to be in surplus this year according to the election promise. But the thing is, they came really close. I think it's just been hovering between 1 or 2 billion for the past 2 years, and then suddenly 3 months ago that this near surplus or balanced budget position turned into a $18 billion shortfall. And just last month it was released that it's actually a $33 billion shortfall. What that's telling you is that the government revenues are shrinking, and at the same time we all know that this government is trying to cut down on spending. So if the government revenues are shrinking, like your taxes, your collection of GSTs and various wholesale taxes and whatever's out there is contracting, that means that the consumer is fast disappearing. And judging from the ease of which I find parking in shopping centres, even like tonight, you know that people just aren't buying. People aren't even turning up to shopping centres. And the amount of business closures that you can see out there is becoming more and more alarming. I'm going to be doing an experiment in a couple of weeks, counting shop closures, and it's going to be interesting to see what results I get at that point in time. But for now, the fact that the GDP release on Wednesday was 2.6% annualized, as opposed to the 2.5 consensus estimate, means that the Aussie dollar shot 200 basis points higher over the next 24-hour period. And that's just insane. People are just jumping on the bandwagon and they think that there's a floor to the Aussie dollar, and little do they know that the 1,500 basis point fall in the last 4 months is just the tip of the iceberg, and there's going to be a long way to go downwards over the next few weeks and few months. But ultimately, I think that regardless of where you are on the planet, the global financial crisis was only just the beginning. And it was a recession that had to have happened, but unfortunately all the central bankers around the world and their belief in Keynesian economics just didn't believe that it should happen, and so all this stimulus that's been going around is just going to cause the next great debacle, which being a government bubble. We don't have too much growth to be looking forward to in this country, because primary and resource industries make up the bulk of all the growth within our economy. So if China has been slowing down for the past 18 months, and for the first time it ticked upwards just last weekend, according to the data, and we still don't know if it's just an outlier or whatever happens. But ultimately, we're in for a rough ride, and the size of the budget deficit is a symptom of the malaise that's going around. I don't know how big these deficits are going to be, but these shortfalls could be bigger and bigger and bigger. Now, without getting too much about getting into the demographics, we all know that it's an aging population, and so the next big expenditure for the government will be more in healthcare and elderly patient care. But even that will turn out to be a great big white elephant, because when the baby boomers die off, you're going to have all this infrastructure that's there, which really there won't be a need for. Because if anybody out there is trying to have kids, we all know how expensive that they are. So I don't think people are having kids now as much as they were back then. So we're just going to have to see how this plays out. But for now, I'm going to sign off. It's been a long day. I can say that the Aussie dollar over the past 6 or 7 hours has retreated about 80 basis points. So the 200 point gain from yesterday, we've lost about half of that. And a big notable move has been the euro. Mario Draghi couldn't work his magic this time, and it lost about 100 basis points over the past few hours. Let's see how the market turns out tonight, and we'll have a look at the non-farm payrolls tomorrow.